time for our weekly market monitor, who has three names that he believes will grow between 15 and 20% over the next 18 months. This is his first time on NBR. He is Kevin Miller, the Chief Investment Officer at Evaluator Funds. Kevin, nice to see you. Thanks for joining us tonight.
Thank you for having me. Appreciate it.
Your first pick is Boeing, a rather gutsy call, frankly, and I'm very curious to know why you think it'll grow that much over the next 18 months.
Well, the things we look at are cash flow, what corporations do with that cash flow. We want positive cash flow, growing cash flow, and we want to see them use that cash flow and give dividends back to their shareholders. And Boeing has a strong history of growing cash flow and also increasing their dividend year over year. Now, this last year, as a result of what they're in the midst of with their MAX jet, cash flow has kind of leveled off. But if you look at Boeing back when in 2017, that stock that year was up over 90%. You look at what they have for competitors, the only other competitor they have in the world, quite frankly, is Airbus. So that gives them what we call a good moat, meaning that another company cannot really come in and take them over or move them from the position that they're in. We're going to be spending money in aerospace. They'll be a part of that. They purchased an aerospace parts distributor, KLX, recently, and that's a very high margin market. Right. So I think we've got a real good opportunity with them.
And then let's go to Visa. It's a consumer play, but it's also kind of an e-commerce play for you.
Yeah, you know, a lot of people, we're embarking on the holiday season, and people are doing a lot of purchases online, and either you're going to use Visa, MasterCard, American Express. Well, Visa is as broadly distributed as any one of them, and it's a way for investors to partake in a strong consumer, as we've been seeing with the Consumer Confidence Report, and what we anticipate as a strong holiday season, without having to particularly select, you know, do I invest in Walmart, do I invest in Target, do I invest in Amazon? So they get an indirect opportunity through that.
Finally, quickly, if we can, Home Depot, is that a vote on the housing market? Why this one versus Lowe's? What's the story here?
Yeah, housing, strong dividend again, strong cash flow growth, dividends at about 2.4 and inflation's at 2. Interest rates are low, opportunity for people to do their housing projects, consumer confidence is strong. It's got probably a bigger footprint than Lowe's, so we really like it for multiple reasons.
Very good. Our market monitor this week, Kevin Miller with Evaluator Funds. Kevin, again, thanks for joining us.
Thank you very much.